You never
Hey, happy Monday. We are back with another episode. I am back. But of course, Kiara's back too.
I'm so here.
And today, it's
JD, you're not on Spaces.
What? Yes, I am.
All right.
Well, son of a bee, I'm on the... I joined with the RBL.
Oh, that's fine. Do that then. Great.
No, too late.
Love it. Stay there.
Too late. Too late.
You killed it. You ended it by leaving.
What?
Yeah.
All right. Awesome. I don't know how to fix that. Do we want to get it going again?
I don't know.
Let's get it going again. We're a live show, Monday to Friday, 12:30 p.m. Eastern. If you can't tell, now you know. Yeah, let's maybe restart it.
Yeah, if you leave as the host, it ends it, even if someone else is also the host. I did that to the Tashi stream once.
Oh, well, I assumed Mr. Producer.
Also, if two of you log on at the same time from the same account, you can't hear each other.
Handy. That's, I think, what happened. I don't know how I ended up logging on as RBL. But anyways, it's all good. Are we going to back up?
I don't know. I asked him.
Okay. Well, we can introduce the topics.
No, let's wait. We can just trim this. That'd be great.
Whoever's watching live. This is
so
fun.
Many people.
JD,
how was Masari? What'd you do?
Masari was great. Thank you. It was a lot of fun. I mean, Masari's in a weird location. Pier 36. The last 2 years it's been at Pier 36 in New York. And there's like nothing around it. So every time you want to have meetings with someone, you have to like get in an Uber and spend $50. But Masari is a little bit smaller than previous years, which makes sense because, you know, there's a lot less runway inside of a lot of their normal sponsors. And since the last Masari, a few have gone bankrupt because FTX happened since last Masari. So anyways, having all of that being said, it was a bit smaller than previous years. I think with Korea Blockchain Week, permissionless, and Token 2049 literally leading into it, that probably explains people are just conferenced out already, and we're just starting the season. But it was very good. It was, I think, at least my opinion is sentiment is definitely better than it was before. Okay. Hold on, I'm trying to join. Obviously, I can't do two things at once. All right, we're back. Okay. So just for people that are tuning in on Spaces, we're just talking now about Masari. So what was really interesting is a few of the conferences over the last year and a bit, sentiment has been kind of negative. Like, you know, people, the energy was low. You know, we were in the depths of a bear, but with no end in sight for the longest time. And I think it kind of felt up until maybe Thursday, Friday, when the macro markets took a shit completely. But it kind of felt like we were starting to round the bend in terms of
that's nice.
Developer sentiment, you know, retail sentiment. There was a lot of really, really incredible teams coming from highly successful fintech Web2 ventures and now expanding into blockchain, which is really cool. I think we're starting to see a lot more sophisticated participants, which is good and bad in some ways. I mean, obviously, often it's a race to equilibrium where there's not quite the same amount of revenue and profit to be made off these things. But I think we have a long time before we hit equilibrium. So still a lot of opportunity. I think all in all, I would say Masari was positive. So you know, the message is always good at Masari. It's very well, relatively chain agnostic and so on. So it was good. I had fun.
And now you're back. You're back to FUD with us.
I am back to FUD. All right. So we're a live show Monday to Friday, 12:30 p.m. Eastern. You can tell because we start late sometimes. We rug ourselves like I did today on Spaces. And we always have a good time. But we're on every major venue, 12:30 p.m.
All of them.
Yeah. Like, share, subscribe. Please help us get the word out. We don't commercialize this puppy because we do it just to give back to the community and help people, at least for the time being. So
as you and I were saying earlier, we also do it because we have different perspectives on everything as people at different ends of different, you know, spectrums, politically and otherwise. And we don't always agree, which is healthy. And so it helps, I think, to spell that FUD, because you don't end up with your confirmation bias. You don't end up in your algorithm circle, which is why you
what
have
people
to
don't realize is how much we argue first before the pod about all of this stuff, and then we come on and it sounds like we figured it out, but
yeah, it sounds like we
spent an hour arguing.
Okay, we're going to talk about real world assets, and then we get to talk about Bitcoin's mempool, which is a little bit wild right now. It's the highest it's ever been. XRP is not in the spotlight for a good thing for once. They have gotten some weird backlash, as is Chainlink, because Chainlink has reduced their multi-sig wallet from 4 of 9 to 4 of 8, and people are worried about that. And then I lost my spot. And then Coinbase launched in Spain, and we also get to talk about FTX, because we have to talk about FTX every episode, because SPF must live in our hearts forever.
It's the tragic tale. All right, we are going to play this beautiful song. Do we have the new one on here?
No.
Oh, okay. We're going to play this beautiful song, and then we'll get rolling. So let's freaking go.
I need you to start smoking cigars instead of vaping, so that I can screen cap you smoking a cigar while you in cartoon form is also smoking a cigar.
You can't smoke cigars inside.
Oh God, what was I thinking?
Hey, real talk. How did you guys get the sound into Twitter Spaces when I was gone?
We didn't. I failed.
Oh, sweet. Okay.
Is that the answer you want?
I expect nothing less. All right.
Fantastic.
So, let's start here.
At least I'm honest. All right. World assets. So basically, we're seeing more and more real world assets come on chain, which is pretty exciting. And when we think about real world assets, I really like to talk about luxury goods or something like that. You know, is your watch going to have an NFT, or I guess is your fancy wallet going to have an NFT? But we're also seeing this come more and more for traditional finance types of products like T-bills.
Yeah, I think the beginning of Masari, there was it wasn't Masari, but there was an RWA conference the day before, Tuesday. And I think there's kind of two themes. I didn't attend, but I talked to a lot of people that did. And there's kind of a couple of prevailing themes. There's a lot of interest, excitement, momentum around RWAs and what that could potentially mean for the space. I think what I've gathered is that the understanding and the path to that inevitable conclusion is a little bit more unclear and uncertain at this exact moment for a lot of these projects. There's a lot of projects that have like an idea of what they want to tokenize, but I think there's a disconnect on how we're going to actually facilitate that and then scale it. You look super thrilled about this topic. It's your fave, isn't it? It's the best topic for you. But yeah, I think, RWAs, obviously, if you look at the market cap, the available TAM of RWAs, I mean, that's pretty much every asset from TradFi that could come over. We kind of bundle them all under RWAs. I mean, we're talking in the US alone, multiple hundreds of trillions of dollars of liquidity. Will that all come into DeFi? No. Will that all come into blockchain finance? Maybe. Will it take some decades? Yeah. So, I mean, we got to walk before we run, crawl before we walk. I think we're definitely at the crawling stage. We're getting pretty close to walking, which is exciting. So I'm obviously bullish on RWAs. I think it's great. The problem is people have been talking about this for as long as I've been in the space. And only now are we starting to scratch the surface of maybe understanding the path to getting these on chain and scaled. The examples currently being US treasuries. Like that's a big piece of the RWA market right now because they're relatively easy to understand. The risk is very well understood. Custody is pretty clear. How you deal with the assets is pretty clear. So we're seeing a good amount of treasuries, which I think is exciting because it allows us to start building real yield, base yield into, much more complex structured products and different things. So it's pretty exciting. I think this to me is one of the next big catalysts for on-chain finance. So I'm obviously pretty bullish on it, but I think, we are further away than any of us would like to acknowledge. It's not going to be the next couple months where we're going to see hundreds of billions of value come on. I mean, right now, I think there's a total of 50 billion in value locked in all of DeFi. So, I mean, to think that we're going to get that much and then some in the next year or two is probably unlikely, but possible, I suppose. If we have some crazy regulatory inflection point, maybe it's possible. But yeah, I would say just remain optimistic but pragmatic when you're looking at what this is.
I didn't know you were going to be so excited about this.
Yeah, I know. Who knew? Hey, I love the idea because I think right now we hear so much about there's conflation of blockchain and cryptocurrencies, right? So there's a lot of the cryptocurrency, the volatility, the implied risk, a lot of the scams overshadows the actual technical innovation. And it really does. It really is a 0 to 1 innovation on finance in particular, and on many other forms of data transfer, data security,
file management,
like there's identity. There's so many things, obviously, that blockchain completely changes.
On that,
this RWA thing, I think, is will bring a lot more legitimacy into the underlying assets in crypto, and
yeah, of course. I like this term on-chain institution. I know that's a really small takeaway from this, but MakerDAO is calling themselves an on-chain institution, which I mean makes sense as a DAO. But I wonder at what point we will be looking at our retailers or our TradFi institutions or what have you, and comparing them by on-chain and off-chain, or at least their activities by on-chain and off-chain. Just kind of interesting to think about the language that's going to come up as we continue to.
Well, and I mean, if you can get RWAs, like, again, using treasuries or platforms like Ondo as an example, I mean, treasuries all of a sudden are being issued at a much higher rate than ever before, given pretty low risk, all things considered. I mean, the US government is still probably one of the more risk-free assets globally, you would think. So, I mean, I think there's a lot of potential to build meaningful products on top of some of this stuff, which I think is pretty exciting. Anyways, all right, Bitcoin,
cool. mempool. So basically the memory pool is higher than ever before. There's way more transactions than ever before. Bitcoin confirmation for your transactions is expensive, but not as expensive as we used to see ETH gas be. It's kind of like in that $7 to $8 range right now, which is kind of high. But what's wild is how many unconfirmed Bitcoin transactions are just sitting and waiting for validators. And so as of last night, there were over 393,000 unconfirmed Bitcoin transactions, which is a lot, especially if you're trying to, I don't know, work in crypto.
Get something done in less than 20 hours?
Yeah, anything at all. I don't have an understanding as to how long it will take for those to confirm, but I gather that it has slowed down. It's super congested. And a lot of this is because people are trying to bring things onto the Bitcoin chain that weren't originally for that. One of the easy examples is NFTs.
Yeah, I mean, this all started, do you remember talking about the artifact craze that was going on?
Exactly.
And so that was, or ordinals, I mean, Bitcoin ordinals was a thing. And now all of a sudden everybody's focused on inscriptions, and it's actually a really cool adaptation of the technology. And I mean, there's a lot of speculative nature of these things right now, trying to, lock up a land grab, hoping for future value capture. Anyways, this is in my opinion, an existential challenge for Bitcoin. Is there ways that they can figure this out? Sure. I'm sure there's ZKs and different things that they can do to still facilitate this, but not crush the mempool. But I mean, the reason I say it's existential for Bitcoin is notorious for being really slow, taking forever to confirm, being relatively expensive for transactions, all of that relative to other blockchains. And all of that taken into consideration, I mean, it makes it less and less viable, I think, as a value, as store of value. And so we'll have to see. We'll have to see what happens. I'm confident there's enough people paying attention to this that, some solution will emerge. But this now for the last number of months has been somewhat problematic if you're a consistent user of Bitcoin.
One of the things that becomes concerning here is how it might become more and more expensive to have transactions on chain, whether in Bitcoin or, like I mentioned earlier, the wild gas ETH from DeFi Summer, that kind of stuff. And that does, so when we think about DeFi and the ethos of DeFi, the idea was that anybody could participate and they had this low barrier to entry sort of thing. But as we see more institutions move in, the barriers to entry heighten. As we see regular transactions become more expensive, those barriers to entry or to just continue to participate are heightened. And that is what XRP is facing in the media right now. Do you like that segue? Worked so hard on it. So of course, yeah, that's why we had to log on so early. Why we started late. So of course, this is a weird social media story. It's very funny. I didn't find it on any traditional news outlets. It was very much a social media story. But people are saying that as institution continues and as companies like Ripple start working with governments, that we are only going to be enriching the elite with blockchain, basically the opposite of the DeFi ethos.
Yeah, the argument here is that the way that the space is shaping up is it favors in many ways incumbents. It will, and increasingly such will favor incumbents. And so is this a Ripple problem? I don't think so.
No.
I don't think this. I think this is pretty much every financial space ever, is that whether we like it or not, when there's significant regulatory capture like there is now, it's big entities run by people with deep pockets that get that done. Now, ideally, we become those people with deep pockets. But I mean, in the age of this constant discussion around equity versus equality of opportunity, this is a real discussion. Like, the people that are putting their... So I see this differently. This is an interesting conversation.
I was going to say, we should actually probably just do a Twitter Spaces where we debate about this for an hour, because this is a pretty big discussion between JD and I regularly.
Yeah, well, this is, to me, this is pretty interesting because I see this differently being an entrepreneur, right? So what people see from the outside is generally the overnight success portion of it. And I jokingly say this all the time, that any success I have is 2 decades in the making. The overnight success, 2 decades in the making, and it's literally the amount of risk we put on the line to make these businesses happen, and the amount of money that we put in and literally risk everything, many times over. I think that's what is deserving of, these opportunities. If you can find a way to tough it out, make it through, and if you have a vision and leadership capabilities and a little bit of luck, I think, then you can do incredible things. And along the way, if you become the 1%, the expectation, generally speaking, there's obviously outliers here like SBF and others. But the general belief is that you've added value to enough people, that your business made enough money that you've become wealthy. And I mean, if you're running entities, in my opinion, that have committed people that are excited and working towards common goals and so on, that's how you really make a difference. And you should be compensated for that. At least that's my opinion. But I do understand the counter perspective on this one, that it is and always has been since the dawn of capitalism. It's been a challenge for the people that aren't in the 1% to work their way up. But what I still believe in, and what I think blockchain offers more so than any solution in my lifetime, is opportunity for class movement. There's opportunity via access to some of these products globally.
Well, I think that's exactly where this criticism is coming in about XRP, actually, is that people aren't upset that XRP is being successful, or that Ripple is being successful, or that Ripple's entrepreneurs or Ripple's employees or what have you are participating in it. But the concept is that they are now serving those who are already elite instead of allowing for service to everybody. Right?
Yeah, I think that's, given their focus on payments, really, and then even grander focus on jurisdictional support, CBDCs,
I
et
was going to say
cetera.
CBDCs, right?
I mean, their common counterparts are going to be institutions. So,
Yeah.
but that's,
it's interesting to me too that like I don't hate Ripple. I think that they're doing a great job with their business. Like, they've selected a need, they're going to fulfill that need. They have a good model, right? And you can buy XRP. You could still go out and buy XRP today, and maybe you'll make money off that. Maybe that's a way that you can participate, even if you aren't
not financial
particularly advice. Not financial advice, even if you aren't particularly flush. But it's kind of interesting because I would think that both sides of the argument would be against what XRP is doing, which is primarily serving governments and institutions, and then ergo reducing the democratization of blockchain finance, more or less. But I don't know. This was really just like a Twitter crypto fight over the weekend.
It's an interesting discussion, though. Like, I kind of like it because, I mean, we have to think about like our utopian ideals. Like, would it be great if all new companies only supported the small guy? And yeah, of course. But at the same time, as an entrepreneur, we have to do what is absolutely necessary to get to survivability. And so often you have to pick a vision and make sure that that vision scales in a fast enough time horizon that you can make a go of it. And so, I don't know, I guess being an entrepreneur and having been in this space and many tech environments for the majority of my adult life.
For sure. I also just want to say that I don't think that people are actually mad at David Schwartz or at XRP or at the other people at Ripple, but instead they're just using that as a projection of what they're seeing happen in the space, right? I didn't find a lot of arguments that were like XRP specifically is fucking us around. Instead, it's this like, my primary ethos and the whole reason I joined this space are dying. Who can I blame, right?
Yeah, I mean, it's prevalent in the space because a lot of the people that have been here since the beginning, one of the fundamental kind of draws for the early adopters was the decoupling from traditional finance.
Exactly.
And so there's a lot of people that hold on to that philosophy at all costs. And I understand it because that was actually what drew me to blockchain in the first place. I have since had a change of heart. Obviously, I don't see a world where that's ever allowed to be preserved at scale, anonymity and decoupling from regulators and government and oversight of any sort. But I think there's a lot of people that are inextricably committed to that philosophy still. And so I think that's kind of where we see some of this, because it is a meaningful shift in the approach to the space, I think.
For sure.
A lot, we were saying for the first few years, almost for the first decade, privacy is everything. But, this really is the solution to all of our concerns with traditional technologies. And I think we're finding out later that that's probably not the number one problem that we're solving. But anyways, that was my final thought on that one.
Hello, soapbox. Now here's actual backlash. Here's backlash that is actually directed at Chainlink, that is more specific and isn't just about ethos. But basically, Chainlink has reduced the requirement of signatures on its multi-sig wallet to 4 of 9 to 4 of 8. So we need fewer validators or less validation whenever something happens. I tried to read about this a little bit more deeply, and of course, Chainlink hasn't shared a lot of information about it, which is part of the criticism.
Yeah, so essentially what Chainlink is saying is that this is just part of a routine rotation of signers. So they do have a process on who is on the multi-sig and how that kind of evolves over time. I kind of see both sides of this. I mean, one of the very common criticisms of Chainlink has been centralization. Do I think that with literally hundreds of billions of dollars secured by a protocol, that we should push the envelope too hard at first towards decentralization? I think eventually we all have that ideal that decentralize as much as we can. But for something as critical to the space as a whole, as Chainlink is currently, especially as in its monopolistic type position right now. I mean, they have to do whatever it takes to stay secure. So that's kind of part of it. Of course, I don't like to see any more centralization than we have to. Examples of that: Terra Luna, Three Arrows, Celsius, BlockFi, FTX, Alameda, whatever. Those are all examples, Gemini, and the like. So those are all examples of kind of more centralized authorities that shit has gone sideways because of poor and non-transparent internal decisions. So as a result of that, we all think, well, decentralize, and then that shit doesn't happen. And
right.
The decentralization process, the governance process, something that we've explored deeply with very sophisticated vendors over the course of the last 2 years, is a very challenging process. There's really no silver bullet on how to do governance, how to decentralize. It exposes a whole bunch of other challenges for startups that, in many cases can be catastrophic. So I guess I see this from both sides. I see the drive towards decentralization and why that is, especially in the wake of some of the shit that's happened over the last little bit. But I also see the need from Chainlink's perspective, with their entire business and reputation on the line. Do I think this is the smoke that signifies fire? No. This to me is just like something that happened and somebody picked up on it and was like, oh, centralization. 4 out of 9 or 4 out of 8 is damn near the same thing.
Not a huge deal.
Like 4 out of 8.
Maybe this is still an ethos chat. Maybe this is still, are we enriching the 1% elite of our multi-sigs?
Well, being a signer on a multi-sig, at least all the ones that I'm a signer on, it doesn't pay me shit. So
no, I'm just teasing.
if anything, I'm
just like, it can all come down to ethos if we really, really wanted to. But sometimes it's just a business decision.
Yeah, in this case, I mean, I'd rather see 4 of 8 than 4 of 9. 4 of 8 implies at least half. 50% buy-in. 4 of 9 is less than half. So
I thought it had to do with expediency, maybe. But
well, that could be it too. I mean, Chainlink has been pretty tight-lipped about it. So
so we don't know. We have no idea.
To me, it's a nothing burger.
All right, this has been a very strange episode of JD and I arguing a lot.
It's strange in the sense that we disagreed a lot, but it's not strange in the sense that my points were a lot better and more accurate than yours. That's pretty standard.
I'm so glad that you could share that with everybody. We actually had quite a few Twitter listeners today, so thank you for joining us on Spaces.
BCP's there. What's up, brother?
Like what you hear, let us know. If you hate what you hear, also let us know. If you have a cool topic that you want us to argue about, we can actually do our due diligence and research them and do that.
That sounded super Canadian of you.
About.
All right. Well, we are a live show Monday to Friday, 12:30 p.m. Eastern. We're on all the major venues. Like, share, subscribe, help us get the word out. We'll be back tomorrow with Taco Tuesday.
Oh, are we doing that again? Taco Trading Tuesday?
I forgot about that, actually. I just like tacos. So
we used to, for a while, I was putting out taco recipes with the highest TPL, I think, every Tuesday or something like that.
I remember that happening.
It was like a couple of years ago.
Yeah. Well, tomorrow is Taco Tuesday. Maybe not for any reason other than what's on the menu. Have a great rest of your day, everybody. Kiara, with that, I say to you, go FUD yourself.
Go FUD yourself, JD.
Later.